What up, fellas?
Gentlemen.
Glorious morning.
Is it Pyth or Pyth?
A hard-hitting question to start with.
Listen, we want to we think long and hard about our first questions on the show to get it off on a right start, and also that's what we came up with.
But as you should, because I've stopped correcting people because it's kind of like I'm a douche.
What do you guys say?
Pyth.
Shit. Okay, so it was a good question. Okay.
Yes, it is.
If you go back to my intro, I was like, only idiots would use Y there if they meant an I. So sorry about that. But all right, dude. So you guys are off a series of big announcements in the desert. But let's start at the top here, because I think there's probably many listening to the show right now who haven't spent the amount of time in the category that you're building in, or really understand the opportunity I think that you guys see. Can you sort of set the table here? What is Pyth building, and what's the big opportunity you're running at?
So overall, we usually call Pyth now the universal price layer. That still means nothing to most people. For crypto people, it would be like blockchain oracle. But by this, it just means that we send, or the oracle is able to provide financial data on blockchain, on over 100. So if you're a DeFi crypto guy, well, call it a blockchain oracle. If you're more into the off-chain Web2 world, more and more we kind of like TLDR it as like we're just selling financial data. And we have like 2,000 price feeds today. So like kind of the big idea is like almost Spotify or Uber. Wherever you go, whatever you want to listen to, you have a single platform that provides it to you. So we have crypto, US equities, FX, metals. So the price of everything everywhere.
Got it. Yeah, I mean, can you give some examples of how like real protocols or products are using Pyth data today, and yeah, maybe what kind of new markets or use cases are kind of growing fastest?
So I think the most used or the most stocked product right now must be Hyperliquid.
Right.
Most recently, they did the whole HIP3, meaning that anyone can launch permissionlessly perps on top of Hyperliquid. And you have the Trade XYZ, so the Hyperunit team that launched the first, and I think they still do 95% of all the volume. They launch equity perps. They must have 15 to 20 right now. All of these are powered by Pyth price feeds. One of the key kind of benefit for equity price feeds for Pyth is, like, I'd say we have 50 of the top US equities priced 24/5. Like US traditional market are still like 9:30 to 4 or 4:30, classic boomer life. Pyth already provides 24/5. Soon enough, I hope it will be 24/7. But so, for example, right now, most of the derivatives, crypto, like stocks talk in crypto on blockchains, like we've had like strong uptake on this part.
I'm very curious about the business here. So you guys are aggregating data from many different sources, and then you got a team of B2B salespeople that are just calling all these lovely places. That like, who are your buyers? How are you making money? And then, yeah, I'd love for you to tie that together for me.
I mean, imagine Pyth, and again, analogy time. It's kind of Spotify. You have a demand side and a supply side for the data. Supply, you mentioned, we have publishers, we call them. It's like exchanges or trading firms that create data, send it to the Oracle, it gets aggregated, and then like it's pretty much like, yeah, the Oracle job and our job to tell the gospel to the demand side. And so the first 4 years of the Pyth network, 99% of the focus was on-chain DeFi protocol. But more and more, like with what was built, like this, like one API, you have like Apple stock 24/5 or Bitcoin or FX. We actually had a ton of inbound from off-chain. And our product was built to monetize on-chain. You know, like, Jesus, like the people that have the most money that are willing to pay the most are actually not on-chain. And we had the realization this year that, and I wouldn't be shocked that in 26, 95% of the Pyth revenue is fully off-chain. So we now have this new product, we call it like Pyth Pro, and you have sub bundles, etc. But it's similar to as if you'd buy like an API key just to get like 2,000 different price feeds, like data every like 50 or like
And
less than 50 milliseconds.
by off-chain, you mean like financial apps, fintechs, that sort of thing?
It can be this. It can be also like middle, like the middle office in banks. Like for most of things, they're used to by Bloomberg, whatnot. So you have overall, like we provide, let's say we have 90% of the, let's say, data breadth of like those big kind of Refinitiv, etc. And the idea is we can provide you a product that's 90% as like thick for 98% cheaper. And actually, we not only have the US stock, we have crypto, etc. So it's
okay. 90. That's a large price reduction. But why are you able to be so competitive on pricing here?
the data market, and it's not like tinfoil hat section, but it's been an oligopoly for the last 20 years.
Okay.
And like whenever you see a Pyth keynote from the founder of the labs, or when sometimes I'm sent on the scene, like we have a big thing where like if market data was a commodity and you could like buy it 20 years ago, it would have been more returns than like the S&P 500. And all of this comes from, let's say, who are the biggest revenue or the company that captures most of this. You have Bloomberg, etc. But you actually go to the like source, like the exchanges. You have 13 US regulated exchange in the USA, SIBO, NYSE, etc. 30% of their revenue is actually selling data. If you tell Binance, like, stop monetizing your data or increase your like bottom line end of year by 20%, I'm sure they'll do it. So like the US financial market data business is like immensely big because you only had a few people that could sell it. And arguably you sell it to the most profitable company in the world, trading firms. So you kind of have this big market. And the idea of Pyth is kind of bypassing that. And the idea of Pyth came from like almost a legal discovery. You're a big trading firm and you understand that all the fields that all your trade fields, you own it. And when you're a big HFT firm that trades Apple everywhere in the world at pretty much every millisecond, you're able to come up with your own price of Apple. And when you get enough of these companies that can do this, you're actually able to create completely new data. So Pyth, and this is why I don't like saying blockchain oracle, because it means infra. Pyth now, like our edge is the data.
I mean, what's in it for, like, what changed that allows you to kind of disrupt this, 30-year oligopoly? Like, did no one just go to the high frequency trading firms and say, give us your data before, or like what has changed?
So the whole thing is, it's a very hard, like, you pretty much have to convince people that trade against each other all day long on the same asset to contribute that. So the thing is, once you have like MVP as in like roster size, like the nth guy, the guy next in the line will be like, if these guys have done it, I've joined this, I'm gonna miss it if I don't join it. You have a big like herd vibe, but yeah, like and the start, this is where we were lucky to have insane backers like Virtue, GTS, Air Max, Jump Trading, Optiver, many companies that like are arguably the biggest trading shop or broker in the world, initially came up with like, we're tired of paying the exchanges tremendous amount of money. Why can't we capture a part of it?
Where does the token fit into all of this? Is that a way of actually aggregating some of those early contributors?
Yeah, of course. So you have the whole, how do you kickstart the network? So yeah, a bunch of grants, whether it's like initial joining or continuously rewarding people. And you like have to carefully balance it so that like whether it takes 5 or 10 years, when you reach profitability, it's then the revenue that gets funneled into this. So it launched, let's say 2 years ago, I would say, or 3 years ago, the token, purely as a governance token. It was like Gary era, so you don't just YOLO. So it was governance token. It was also like give people that use the protocol that might own some token power in changing things. Like whether like even if it remains very now, we just sell financial data. we started as a crypto-based or blockchain-based protocol, and very much like people that use the product should own it, and it should be fair, like fairly governed. Most recently, as we kind of bump up the on-chain fees, but also the off-chain fees, most recently, the token is getting bought by the DAO Treasury. So every month, the product accumulates revenue to the Treasury. So you have this ongoing. And actually, on top of the governance, we have something called Oracle Integrity Staking. What if the Oracle's wrong? Like usually, till now, it was like, oh, I mean, sorry, you've wrongfully liquidated position. I mean, I can't do much.
Right.
With Oracle Integrity Staking, the goal is, if price was wrong, find out the publisher that were wrong, slash them, and use that slashed amount to compensate user.
So tell me about this like shift from deep crypto focus to competing with everybody on financial data. I'm curious, how soon did you guys recognize that now is the time to go make that, broader market approach?
I think it was just earlier this year. Or at least we very much like interested in thinking about it. And most recently, the founder of the labs was talking at Breakpoint last week, and he said like Bloomberg, Refinitiv, and a third company are worth 200 billion. If you look at crypto/blockchain Oracle, Chainlink, Pyth, Redstone, maybe Chronicle as a token, API as a token, it's like 15 billion or less. So you have like three companies and so they sell data, they don't sell infra. And so that was kind of
what sort of changes got made on the team to go after it? Because I feel like this is the other piece that's really big, right? It's like that sort of the roster you need to go after, like the blockchain Oracle opportunity seems very different than the roster you want to play with to go after like the selling data to everybody market.
Arguably, the product didn't change too much compared to last year. The only difference is just more price feeds.
But how about the people behind? I'm interested in like the organization.
I mean, we grow quite a bit, Pierre. How much did we grow to? 50%, I'd say.
Yes, and now lots of I'd say big tier one banks, US guys have joined the team on the BD side, where most of the time they drop acronyms for assets classes that I've never heard of as a DeFi and crypto gen myself. But yeah, I think that's very much where a part of the growth of the team is, and even we're hiring on the marketing side for like more B2B enterprise type roles, because yeah, it's a whole new different ball game where Pyth could be integrated permissionlessly on chain. Any developer building a perp dex can say, hey, I'll go get my prices from Pyth. Now you're actually selling to, it's 3-6 months sales process with some of those big guys. So we have the right people now in place to do that.
Here's my call, Josh. You want to go make money in 2026? Join a sales team. 2026 is going to be the year of sales in crypto. Like,
I mean, it's a comment. We were at Breakpoint last week too, and streaming every day, and talked to a lot of category leaders within crypto who, billions of dollars in TVL sounds big within crypto, but a few conversations in the trad world, and you realize how small that is and how big of a prize there is out there. And yeah, I think 2026 is the year of.
I mean, every single category we had that conversation with is basically like, oh yes, cool. Like the winner, the ones that we had the most confidence in being able to go win that category were the ones that had a pole position in crypto and are like, yeah. That's not what I'm focused on. I'm focused on that big mountain up there.
And
Go ahead.
I come from the previous crypto. I come from the startup world, where the good thing was that, I raised X millions to build this that has no users, but it's growth, which I feel like crypto has had this, I guess, part where it was like, we're gonna launch a token to fund the operations that hopefully is makes revenue at some point. And now we're a bit more into, okay, how much is your protocol and the revenue is. And I guess the Pyth Pro product is this new step of, okay, now, the revenue will go back and buy some Pyth in the reserve, and we can, accrue value to the network. I think that's what I'm seeing from my own perspective and experience.
I mean, I'm interested as you guys look forward, how strategically important it is for you to maintain your kind of market share within DeFi and kind of be prepared to grow at the space versus just recognizing that 95% of your revenue today comes from outside of it, and also the scale of the opportunity outside of it. Like, how does the DeFi integration still matter to you, or is it all hands on deck for this bigger opportunity?
I mean, I could go two ways about it. Yes and no on the DeFi side. Yes, because, for example, Drift or the hyperliquid usage we've had on the Pyth Pro product, like if you're a big market maker or a big prop shop that trades there, you want the same data as they have at the same time. You want to train your model, be sure that it works. So actually, one DeFi integration of a big protocol where you have big users that can sustain this cost, like it's actually great sales funnel. And it's usually it's like prop shop you've never heard of, you'll never heard from again. So on this part, it's very great even on the sales side. But it's also when you like off chain, people start looking at, okay, what are the chains, what are the apps, how big are these apps, etc. So it's always like a proof in the pudding that this data works. There's already money at risk, value at risk based on this data. So it's not like, right, I pull something, these guys are just YOLOing,
Right.
kind of gives you credit, gives like track record.
Makes sense.
Awesome. All right. We have to leave it here because we do have another guest to bring on. And I think I love these conversations, Josh, because we're like, I mean, we talked to, I think, the Redstone guy a while back, and I was like, oh, right, there's something interesting happening here. I think these markets that have huge TAMs and are being competed with in an interesting way because of crypto, I think has really got my intrigue. And when I hear a 98% cost reduction, like if I'm a sales guy, that's like, put me in, baby. Like I just,
Send you
the
form.
Yeah. Gentlemen, is there anything else you want to leave us with before the end of the year here?
Check out the pin tweet on the Pyth account, Pyth Reserve. I think there was a big announcement from Breakpoint, and a bunch of cauliflowers everywhere. So that's the only thing we have left.
All right, dudes. Well, thank you for helping us learn how to pronounce the name of this 4-year-old network and giving us a little insight into where the opportunity in data lies. I feel like we'll check in again soon.
Job's well done.
Thanks, guys.
Thank you.
Peace, guys.